Good morning, everyone, and thank you for joining us to our next Clue webinar, Banks versus Non-Bank Commercial Lending, why it's important. But before we start, just a bit of housekeeping. This webinar will be recorded and used online. Otherwise, we want this to be a collaborative session, so feel free to keep your mic and your camera on. And if you've got any questions throughout the session, we'll be more than happy to discuss them. Righto, so bank versus non-bank, important. Well, the choice matters because you might get the odd deal that requires a faster turnaround time, or your client may not be in a position to approach a major lender with all their policy requirements. Approvals typically get through with a little bit less friction in the non-bank space, and all that can do is, create the opportunity for better client outcomes, and that's what we're all in it for. So what do you need to know with bank lenders, right? Well, we all know that they're probably going to be the cheaper option in the market. They'll typically offer longer loan terms if that's important. Obviously, that really depends on the segment within the big bank lenders. Obviously, if you haven't dealt with the big banks in terms of commercial lending, you might not know that they operate in like segmented silos, if you will. You got your small business, your business banking or commercial bank, and then corporate and institutional. So they will tend to offer longer loan terms as a general rule. However, that can be different depending on the circumstance. But they'll typically require you to be in business, or the borrower to be in business, for a couple of years. They'll require more documentation than your non-banks will, and they're typically much slower approving loans, as we may not know or may have seen in the past. 4 to 6 weeks is probably typical of your small business. Longer,
effectively with the major lenders, their process of assessment is just very different. It's a lot more robust. They do look at all elements of the client in terms of both their personal position as well as the business. So there's a lot more that they're going to be reviewing in their process to ideally get to an approval than if we do go out to that non-bank or private space, where it is more streamlined. The focus is a little bit more narrow. So fundamentally, that's the major difference between the two.
Yeah, so just a big one to keep in mind. Banks might offer strong pricing, low rates or lower fees as well, but they will take typically longer to assess a deal than a non-bank will. So non-bank lenders, they're the opposite in terms of turnaround times. They can be, in the market for 2 to 4 weeks. Typically 2 to 4 weeks. In private space, that could be 1 to 2 weeks. We've seen deals definitely get settled. They're extreme cases. You really don't want to run every deal with that sort of urgency, because you can pay a premium for that. They're also more flexible on documentation, income verification. We'll come to that in the next few slides, but they are far more responsive to time-sensitive deals. And one thing you need to know, or your clients need to know, is that they are certainly more expensive, and not just in rate, but also in fees. They can definitely add up, and that's something that you've got to be cognizant about. Who are they for? Well, they're typically for people who, again, need a quick turnaround time, but we typically see developers utilize non-bank and private lenders more often than not, just because they require that flexibility that these types of lenders will offer.
I think I'll just add to that. I think one of the key things for these non-bank and private lending providers is it's really that speed to market to take the client, out of the market as well. So they're really big on providing really fast indicatives. For those of you who haven't used a private or non-bank lender before, that's a really important piece of using them. Bearing in mind, though, those indicatives, there are obviously going to be a number of conditions you need to address to then move that into a formal approval. But the key, again, is that you're actually able to give the client some confidence really quickly if that's what they need. So speed is certainly one of the #1 factors for using these type of lenders.
Now, non-bank lenders are probably the only lenders that will service the SMSF space. So it's not just for developers or people who need quick turnaround times. It's for people who want to borrow through their SMSFs, self-managed super funds, because the big banks pulled out of that space a long time ago. So if you've got clients purchasing, whether it be commercial or residential property in an SMSF, you're probably not going to find a solution at a big bank. It's very rare cases where the big banks will do SMSF lending, and you'll find that the non-banks have taken that niche on. So the key differences, we just put it here in a nice and simple table. Banks, interest rates, typically lower, non-bank private lenders, typically higher. Assessments with the banks are generally full doc, lease doc or low doc are available, whereas your non-banks will have your lease docs and your low docs, but they'll also have no doc options as well. Turnaround times, like we said, probably about 4 to 6 weeks for bank, non-bank 2 to 4 weeks, or private 1 to 2. Credit appetite is much more conservative at your major banks and a lot more flexible with your non-banks and your private lenders. The LVRs can be very similar, up to 80% with the big banks, even in commercial lending, can go even higher for specialised professions, whereas your non-banks are probably around the same, 80% thereabouts, and your private lenders probably cap out at about 70%, although there are 1 or 2 that might go slightly higher, but you are going to pay a premium for that.
Just a quick one on the pricing side of things. Yes, typically speaking, you will pay a bit more on these non-bank private lender options. What I just want to outline, though, is that especially in more recent times, the gap or the difference between the major banks and this non-bank space is actually a lot smaller than most people think. I know many years gone by, people were always concerned about going and paying in the double digits in terms of interest rate, and even up into 15, 16%, that kind of thing. People would often talk about that, and that was feedback we certainly received. It's certainly not the case these days. There's plenty more options available to you these days, and it's also super competitive. So the differential in rate is not as great as it used to be. So bear that in mind, albeit it is still higher than what you pay for majors. So it's just about really understanding what that real cost looks like, and it may not be a deterrent for your client in going down that path.
Okay, so if we think about why a deal might not fit a bank, I think it's a good thing to think about, because it will sort of inform your thinking as to when it will fit a non-bank or a private. So if your client comes to you and they don't have financials, or they're not available, they might not have been running their business for 2 years, which is the main requirement for major lenders, even in commercial lending. They have the clock is ticking on a settlement, like we said. They need a fast turnaround time, or they might have credit issues, or ATO. ATO is a big one at the moment. But the other one that I wanted to talk about was an exit strategy scenario, and I think this is where non-banks and private lenders really shine, especially if your client has tapped out in conventional or traditional servicing assessment, and they can't show a big bank that they can service a debt. A non-bank or a private lender might not care about that, because they might be relying on the exit strategy. So, for example, if your client has a solid exit strategy by way of sale of asset, for example, so they're thinking about paying out the loan by the sale of an asset that's upcoming, it might be 6 months away, it might be 12 months away, that is a suitable exit strategy for a non-bank or a private lender to take comfort and lend to your client, even though they can't afford the repayments. And why I say that it's not an issue to be able to afford the repayments is because they can also structure these loans in a way where there's no repayments throughout the loan term, because you're paying all the interest out at the end with the pay down of the principal. So it's all capitalized into the loan, and therefore there's no requirement to make any repayments during the course of the loan term. So that exit strategy is key, but it's also important that it's not so speculative. So it's got to be either a sale of asset or a refinance or something else that's tangible. Like if your client is in business, they might have a really big contract that's coming to fruition in the next few months and they're going to be paid for it. That's also quite acceptable.
I think the key is that you've just got to validate your exit strategy. You've got to be able to articulate that properly. And if you can do that satisfactorily, then that should meet the requirements of the lender.
Yep.
Just before we move on, just give it a moment. If there's anyone that has a question, quickly jump in.
Yeah, yell out.
Otherwise, we'll keep moving. No, all good.
Cool. So in terms of a scenario, we had a client that a mortgage broker introduced to us, and the client was having difficulty settling a property. They've gone through the traditional bank channels and were just hitting dead ends. And the client was in rescission. For those of you, who've been with us for a while, you know what rescission is, but I'll just quickly explain. It's when the client failed to meet settlement and has been given 2 weeks to settle. Otherwise, they could potentially lose their deposit. So this client was brought to us at the start of their rescission period, leaving us only 2 weeks to find a solution. We brought the deal to a private lender that we worked with previously, and we knew was okay with that particular location. And we were able to fund that deal in 1.5 weeks from application to settlement, saving the client their deposit of $600,000. So safe to say that the client was very happy. Our Clue partner was, stoked and looked like a hero. So that's the type of scenario that could come across your desk. Just because it's quick or requires a quick resolution, it doesn't mean it's not a good deal. It might just mean that the client was not matched with the correct solution. So don't always look for the cheapest lender. You got to look for a lender that can meet that scenario, meet that time frame, or help with an exit strategy type deal, rather than the cheapest rate or fees.
Well, just to add to that, I mean, that's part of what Clue, provides in terms of solutions. We are solution focused. We do have access to the whole market from major, non-bank and private. So I think having that choice across those 3 distinct sort of lending appetites is really important, but also provides great choice to your client, solution that fits them. So, they're always going to have plenty of options to choose from, and then we help guide them and make sure we match them with the right solution for them, and obviously for you to service them and keep them happy.
That's exactly right. So what we've got to be thinking about as well is the opportunity cost. So, sometimes we'll come across clients that are really hesitant about going to a non-bank or a private lender because the fees are so high and the rates are so high in their opinion. In reality, as Eamon talked to previously, the differential really isn't that high, but you got to think about what's the opportunity cost of a rescinded contract or a missed opportunity. You buy a property today, it's better than buying it a year down the track because the price goes up. We all know that in a decent market. But getting that opportunity moving forward today, whether it's starting a development today rather than 6 months down the track.
That might be one to touch on. That development piece in particular is important. Maybe talk about that and obviously pre-sales.
Well, I don't want to talk about it too much because our next webinar is all about development finance. But basically, with non-banks, they will typically have a lesser pre-sale requirement for developers, which means that they can get started much sooner. And we know that time is money in development, as it is in most business, but time is also margin. Yeah. So time saved is money made.
I think one thing I will add, I know that some of the non-banks out there too don't necessarily have line fees. And for those of you who aren't familiar with line fees, that can add extra cost to a client's facility. So traditional lenders, the major banks, they often will have commercial line fees. Just to quickly cover off what that is, it's a rate or a line fee rate charged on the limit of the debt that the client is obtaining, not necessarily on the drawdown amount. So if your client's not utilising the full amount of funding from day one, that can add unnecessary cost to them that may not be charged on a non-bank lender, for example. So once again, back to that weighing up what the real cost is, it's actually understanding how the funds are going to be used. So that's something that we at Clue will definitely be comparing when we're looking for options for the client.
And I really like this Clue fact here. It's very apt. A cheaper bank deal that doesn't settle isn't cheap at all. So just think about that. All right. So when to consider a non-bank? Again, if the client doesn't have any financials or they haven't been lodged, and we're in that period of the year where the previous year's financials are not being accepted by the banks, that's a good type of client for a non-bank or a private lender. Is there a looming deadline that a bank's just not going to be able to meet? Is it a scenario that is reliant on an exit strategy rather than traditional servicing, or has a bank already said no? Oftentimes we'll get clients that a bank has said no to, or a couple of banks have said no to, but we're able to find or pair them up with another lender that can not only meet their requirements, but meet them in a very economical manner.
Which is one more. Sometimes it's the client as well, just can't be bothered jumping through the hoops that are required in traditional lending for the majors.
Yep.
Now, we've had clients who just go, I can't be bothered going through that lengthy process. I'd rather pay potentially a little bit more, but get it done really quickly with less stress. So that's another thing to consider.
Here's another one for you, Eamon. What about if your client needs a second mortgage? You're not going to take that to a bank. The second mortgage is something that is becoming a lot more, I guess, frequent. It's where a client needs more money than their bank will, give them
against a particular asset.
Against their, property. So they might have a first mortgage to a bank at 50% LVR, but they need maybe another 10 or 20%. We could typically go out to a private lender and get that additional funds against that same property, and that private lender will sit behind the first mortgagee on the title, so hence the name second mortgage.
Or potentially even a caveat loan.
Caveat loans as well. So what a caveat loan is, they don't actually register a mortgage as such. They just register a caveat. It's a much quicker way for the lender to register their interest against the property, and they don't need to get the consent of the lender that's sitting on the first mortgage. So again, these are all different options that clients have available to them through you and via us at Clue. So if you hear that term, that's definitely something that's going to sit outside the banks, and just get onto the Clue portal and flick it through, because chances are we'll probably be able to help them. So you want to talk to how we can help our Clue partners navigate the bank world and the non-bank and private world?
Well, yes, for any of you that have been on the previous webinars, you probably know this, but just to reiterate, the whole Clue model is based on providing choice to your clients in the commercial landscape. So whether it be a major bank, a non-bank or private, we're going to be able to bring the market to you and to your client. So if you've got any scenarios, you're obviously able to submit them through the Clue platform with as much or a little detail as you have available to you. If we need more info, we'll be able to run with it from there. We're able to run tenders and compare across multiple lenders to make sure we do give great choice, but also come up with some really competitive options for your client. So the idea is that we can come back to you and your client really quickly with those solutions. It helps you protect your client relationship. It helps provide solutions to your client. And then we help to manage that process from start to finish for you. And you're obviously able to be kept up to date through the platform at every milestone.
Cool. And just on our lender panel, so it's pretty broad. I mean, we've got all the major banks, all their subsidiaries. We've got several non-bank and private lenders. Our lending panel for commercial is as big as a residential mortgage broker's panel for residential mortgages. So we will have a solution there for most clients. So yeah, give us a crack, and I'm sure we'll do some good work for you and your clients. So that pretty much takes us to the end of this session. Just to recap, banks are really good for your straight up, vanilla deals, as we like to call them, longer term loans with, good trading history, or at least 2 years trading history. But your non-banks and your private lenders have more flexibility and are generally quicker to move, quicker to assess, and quicker to settle. And will help you and your client, filter through all the options on the market that are suitable to their requirements at that time. So is there anything that you wanted to add there?
I think just for those that are on the webinar now, I mean, when you look at major bank, it definitely sort of leans more towards those more detailed assessments where the bank's really looking across the whole spectrum of the client into personal and business, as I said before. And probably for those clients that have a lot more requirements outside of just the debt piece from the bank potentially, that's obviously going to be a great fit, a major lender. That non-bank space is more asset driven and can be sort of ring fenced, and that's where it does provide that flexibility for your client. And they're able to have funding with non-banks and major banks at the same time, just depending on their circumstance. So yeah, going down to non-banks or private just gives you more flexibility, more focus on an asset and a point in time, rather than having to get caught in the weeds around everything else behind the client. So as always though, it's case by case and just finding the right fit at the right time for your client.
Cool. So again, guys, here are our details. If you haven't already, jump on the website, cluefinance.com.au, and hit the sign up button. Have a look around the portal. And if you've got something across your desk that you think might be best to send through either to a non-bank or a private lender.
Or even if you're not sure.
Yeah, if you're not sure as well, we've got an unsure button there too. So just, flick it across, and the best thing is you'll be kept abreast of everything, every milestone that deal goes through. And we're always open to workshopping a deal. If you're unsure and you don't want to send it through first, you're more than welcome to get in touch with us, and we'll have a chat about it for you as well. So what's next? Like I said before, our next webinar is all going to be about development finance. So we'll get into a little bit more detail than we just went through before. But yes, please feel free to tune in then. It'll probably be in about 4 or 5 weeks' time. We'll put the dates on. Yeah, we'll put the dates on social. So that's pretty much it for us. And this is the MFAA CPD code. So don't forget to chuck that in your portals. But otherwise, thanks for tuning in, guys, and we'll look forward to seeing you on the next one.
Thanks, everyone.